51 things that you need to do each year if you've got a simple limited company. Who would believe it? There are 51 things that you need to do if you've got a simple limited company for financial administration. So what are these 51 things? Well, I'm going to go through those in this video so that you can understand what you need to do, when you need to do it, so you can be organised and prepared, and the 51 things are not too intimidating. So what are they? Well, you need to do annual accounts, the company needs to do a tax return, you need to do a tax return, VAT, PAYE, and you need to keep Companies House happy. Does sound like a lot of things, but I assure you, when I break it down, it's not too bad. This is part of a series of videos about tax and accounting issues. If you'd like to be kept up to date, then please subscribe to the channel. If you press the like button, it helps me get the message across to more people. And if you put a question in the comments box, I will answer it as soon as I can. So let's get started. What are these 51 things? Well, the simplest and perhaps the most obvious is you need to do company accounts. So a company needs to do company accounts. They need to do them every year. So if you've got a year end, and if you might have a December year end, a lot of companies do. So if you've got your year end of December 2020, you need to file the accounts normally within 9 months. So by December 2020, September 2021 is when you need to file the accounts. You've got 9 months. Along with those accounts, most accountants will normally file the corporation tax return at the same time for you. So although the tax needs paying at the same time as the accounts need filing 9 months after your year end, it is a peculiarity of the system that the actual corporation tax return only needs filing a full year after your year end. So you have to pay the tax, and then 3 months after you actually make the tax return. Of course, normally all of those things are done at the same time, but those are the deadlines and those are the rules. So moving on, so not only does the company need to do a tax return, but you personally need to do a tax return. So if you're a director of a limited company, then you should ask for a tax return for yourself, even if you don't have tax to pay. So directors should do tax returns. And I know it is a peculiar thing because if you just got some P60 earnings, all of the income has already been assessed. It seems like a bit of a waste of time, but those are the rules. I don't make them up. As well as submitting a tax return, so what's the deadline? So it's a peculiar one because the company has your company year end, which can be any date in the year, but for your personal tax, the tax year end is always the 5th of April. So if you've got a December year end, the year end for your company accounts and for your personal accounts will be different dates. So it's always to the 5th of April. So if you if you're doing your tax return to the 5th of April 2021, then you've got until January 2022 to file that return. So you get, well, I don't know how many, just under 10 months to do your tax return. And you pay your tax on that January deadline as well. If you have a significant amount of tax, then you go into payments on account and you pay your tax in January and also in July. So you make your tax return sometime after the 5th of April, but before the end of January, pay your tax in January and perhaps also in July. So that's 3 things you need to do for your personal tax. The next thing to think about is payroll. Now there's loads to do on payroll. Of those 51 things, 36 of them relate to payroll because payroll generally is monthly. I'm assuming it's not weekly or bi-weekly, which it could be. I'm assuming it's not by lunar months, which it could be. When I first started at work, I was paid 13 times a year. Anyway, so normally you pay it monthly. So your payroll is done monthly, which means that you need to tell your employees, which could just be you, just the director, and of course if you don't have any at all, you don't need to do a payroll, but most companies do have a payroll. even if it's just for the director. You do the pay slips and you pay the you do the pay slips and you do the payroll, and normally at the end of the month, and then in the following month you need to pay any payroll taxes, and you need to do an RTI submission which tells the revenue who you paid and how much you paid them. So that's 3 things you need to do. You need to do the pay slips, then pay the tax, and file the PAYE submission. 3 things. So moving on, we move to VAT. You may or may not be VAT registered. Some businesses don't need to register at all. If you're over £85,000 in turnover of a VAT category, then you need to register for VAT. So if your VAT turnover is more than 85,000, register for VAT. VAT normally is done every quarter. It can be done by different ways, but normally it's done every quarter, and normally those quarters tie up to your year end. So if you've got December year end, normally your quarters will be December, March, June and September. And if you've got a January year end, that will be 1 month later. So if you've got December year end, your VAT return, so you'll have a VAT period to the end of December, and then you make the filing a month and a week later. So so end of December, the 7th of February. So you file your tax at that time, and you also pay it at that time. Now, it's possible you don't have to pay. You don't have to pay because some people get refunds, or you can also actually set up a direct debit with the revenue. I tend to find those a little bit difficult to work because the revenue takes the money out of your account sort of without you knowing, in a way. So I like to be in control, but you can do it by direct debit and it gives you one less thing to do. But you need to file a return and make the payments for VAT, normally every quarter. The next thing that you need to do, and the last thing, is to remind Companies House who you are. So Companies House is the register of all companies. So each year they need £13 to pay themselves. So they extract that from the company, so you need to pay them £13, and you need to remind them in a confirmation statement who the directors and shareholders are. And that's to sweep up any changes in the directors or the shareholders or controlling parties that you've forgotten to tell them about during the year. Because really, if you change the directors, you should tell them as you change directors. But it's so easy not to remember that. So the confirmation statement just makes sure that all the loose ends are tied together. So that's dealing with Companies House. Now, 51 things. It sounds like an awful lot of stuff to do. It's not too bad. Firstly, you've got a whole year to do it, so doing 51 things in a whole year isn't that hard. And also, you know, it's what accountants do, so you just need to employ accountants if you're worried about it. Just get an accountant and they will make sure that you hit all the deadlines and keep you on track. But, you know, you can just keep a diary and make sure you've got all the deadlines in your diary, which is also possible. So if you're worried about that, or please get in touch, because they just feel like an awful lot of things to do, but at the same time, it's a little bit of administration. It's not the end of the world. If you do have any questions that you'd like to ask in the comments section, then I will get to them as soon as I can. This is part of a series of videos about tax and accounting issues where I keep you up to date on what's changing in the tax and accounting. Surprising how much has changed in recent times. So if you want to keep having these updates, then please subscribe to the channel. You will be very welcome. Pressing the like button helps me get the message across to more people. So thank you for watching, and I'll see you on the next video. Thank you.